Appreciate y'all being here.
Brian, are you jealous
of your Trading View coffee mug?
Yes.
That is pretty cool.
Like
all I brought for you is a beer.
Okay. What are you drinking over there? What beer are you drinking?
I am drinking a Good People
Ooh.
Mumbai Rye in IPA. So Birmingham Brewery.
There
you go.
Good man.
This episode is sponsored by Good People Brewing Company.
Roll Tide, said Summit.
Whoa. Easy, pal. Also, War Eagle. Come on now. No, don't Roll Tide me. It's a good way to get blocked.
Okay. Aslan, I have manually adjusted him just ever so slightly. Talking about like 5% here. So just let me know what you think there.
Yeah, I adjusted down too, but normally people tell me the exact opposite. They tell me I'm too quiet on my mic, so I was pretty surprised to see that.
Yeah, I've noticed that too from your stream, so I had you kind of cranked up, so I think it may have been on.
Okay. Yeah, I tend to over crank it because I get that complaint so often.
All right.
It's better. Good.
Back up.
There you go.
All right, so I guess let's just kill some time for a minute. You know what else I can do that might make things easy? Is there a way to show the name back? It'll actually say link USD.
Oh, like the watermark.
Yeah, the watermark.
I know how to do that in TrendSpider, but not Trading View. There's your background.
Watermark, look at you. God, you're a genius.
There you
go. This
go.
is why we have him here. That answer.
I'm here. Charting tutorials.
I'm excited to get your rundown on DeFi.
Sure. It's DeFi is trying to figure itself out again a little bit. You know those liquidity pools. Have you ever made a trade on a DEX?
No, but I realized that I do need to, because like I stack moon bags from cycle to cycle, and I have something now that's like a couple grand that I don't know. It's Kryll, Kryll. Don't know when I got it. Don't know why I got it. Whatever. And
sounds familiar from a while back. But
yeah, I think it was during the ICO craze. But the only way to actually trade it is to go through one of these dexes.
It's easy. Damn, I just gotten clowned getting stopped out there. Bitcoin looked like it wanted to fail down a little deeper, but now it's just forming some kind of low time frame pennant thing. I think I'll have a little time.
Said we're live and I didn't. Yeah, appreciate you guys just chilling with us while we're setting up.
Let me know what questions y'all have. So what I was gonna say is when you buy through a DEX, you know, you're going through with the modern DEXs, they're not order books. Now the Solana, whatever that one that FTX backed, that does have order books, but most of them, when you hear about Uniswap and SushiSwap and stuff, those swaps, they work on pools of liquidity. So
right,
you don't set bids or offers and say, this is what I'll buy at, or this is what I'll sell at. If you're a liquidity provider, you're saying, I got a bag of Kryll and the pair is with Ethereum. So you have to provide say $1,000 worth of krill and $1,000 worth of Ethereum, both in there.
Right.
And then there's this price relationship between the two. As one goes up and one goes down, you end up with more of one and less of the other. And you earn fees from people that are trading through it. So you're the market maker by being the liquidity provider. But the concept of impermanent loss occurs when you end up overweight one and underweight the other because of the divergence in the price movements. And it has a lot of ramifications. I think in some ways it makes moving the price on the coins different than traditional order books because it's a different type of order system. And then the other is that it can be painful for the liquidity providers if they suffer that impermanent loss. Like as it goes up, it's almost like they're dollar cost averaging out because they're getting more Ethereum and people are coming and buying their krill. So they're not getting the full upside while they're a liquidity provider. And that's where those governance tokens come in, where they're giving them benefits and stuff in addition to that. So it introduces a lot of dynamics, and a lot of it is pretty flawed, I think. And, you know, people, as those coins went down so much, they had half krill, half Ethereum. Well, if krill goes down 90%, everyone that was going and selling their krill was giving them all their krill, taking their Ethereum. So when they take it out, maybe they have like a tiny amount of Ethereum and a ton of worthless krill because they held it down for so long.
Right.
So it just ends up being a complicated process for people to figure out, like, how do I get wrecked in these scenarios, or how do I win? But you tend to get it. The natural state of altcoins is to bleed out for a long period of time and have short periods of time where they go way up. And a lot of people got really wrecked by providing liquidity in those pools. So figuring out how do you do that properly? How do you manage your exposure better? Just kind of how you do stuff in general has to be one of the big things that is accomplished there, to educate people who are providing liquidity, convince them that it's worthwhile to participate and that you're not just you're not the sucker, in that scenario. So it's complicated, but it's still a promising area. Like, it's certainly the most participation that's ever occurred on a DEX. And if they can get it to work, because there's automated market makers and stuff on the back end that are helping assist what happens there.
Right.
It could be really great.
Isn't Sam Almeida and a few of those, like, the big boys are behind it and they're pushing it. And I know there's a ton of liquidity. There's a ton of interest in this. The numbers don't lie. Like I've looked through some of that stuff, but I personally still don't have a good enough understanding to be comfortable to like jump in and try to make a play. And because all I can think of is charts like this. This is why I pulled up like the Zcash Bitcoin chart, because over time, like, a lot of these just straight bleed out, just like you said. And here we are, just on the Bitcoin pair, not even on the dollar pair, but on the Bitcoin pair, depending on when you got in, like, forget all these like initial wicks, but anywhere in these kind of highs, you're down 90 to 99%. And I feel like that's what's being teed up for a lot of these people in the DeFi space. But I don't understand enough of it to really speak. There's a variety of reasons why that's probably true. But one is for the same reason that it's been true in Zcash, which is the scheduled inflation rates for a lot of these projects is really high over the coming years. So if only 10% of the coin has been distributed so far, 90% of the coin still has to come out. So the market caps are higher than they appear on paper. So great point.
And then one of the solutions to what I talked about with impermanent losses, in order to incentivize people to be liquidity providers, is a token independently. And then also the DEXs themselves, they incentivize liquidity providers by giving them tokens. Well, they're earning the token in order to be a liquidity provider. In some scenarios, they may just take that token and dump it. So it's a constant sell pressure, similar to what a miner is on a coin like Zcash. Yeah.
Or like it's like 2.0 of staking. That's what it reminds me. Because that was the big thing, even before ICO. The ICO craze was like, oh, what was staking? What are we going to stake? Oh, Dash and a number of the others. And people were like, they thought that would be a buy pressure, like forever, like a continual buy pressure setup.
Yeah, people would want the 20% or
Yeah,
whatever.
and it was worthwhile, but all of a sudden they realized that over time against Bitcoin, it's not worthwhile, so they're dumping it. I don't know.
It's similar. I think it provides more use because you're providing liquidity for other people to participate in the market. But there's definitely a kind of a sucker's mentality,
right?
For if you are a liquidity provider for too long, there's a lot of ways for it to go bad. It doesn't always have to be that way, but there's a lot of ways for it to go bad. It's almost like even if it goes up, you know what a covered call is in options? It's kind of like you're selling a covered call constantly. Like every week you're selling a little bit more of your bag as it goes up. So you never get the full upside if the coin moons, yet you're a community member, right? Because
Right.
you're
Hey,
providing
welcome.
liquidity.
Right.
But then you're kind of constantly selling your bag. But if it goes down, you're getting more and more and more of that token. So there's some issues that need dealing with that aren't currently dealt with, that I think they have to figure out the dynamics because it's a whole new thing. However, you don't have to be a liquidity provider to trade DeFi. Like you can go take a trade because you just want to own the coin and then never be a liquidity provider. You're just the buyer. You're the liquidity taker, right?
Right.
So you go in and you provide your Ethereum or you provide USDC or whatever the pool is.
Because you're speculating that it'll have higher worth in the future kind of deal.
Correct. So it's a way for you to buy krill or whatever. And in that capacity, it's pretty valuable. Like it provides access to tokens that otherwise you rely on centralized exchanges to list you. So if you're a project and the liquidity provider, if they stink, like if you don't have a Binance listing or whatever, or an FTX listing, then you can go put some of your funds and provide liquidity so that people can come buy your token on some of the popular dexes like Uniswap or SushiSwap or whatever. That's primarily for ETH. The challenge is if you're on a different blockchain. So that's where there's some other like cross blockchain swap tools that are coming out. And that's Crypto Bobby, if you know him. He's a huge believer in Thorchain. It's Rune is the token. And I think their promise is about doing cross-chain swaps. So the same premise, except for it's not just ERC20s, it's various approved blockchains. So you might be able to swap something on the Cosmos ecosystem or whatever.
Yeah, that's been kind of the holy grail for a while. Like even Litecoin's talked about doing different atomic swap setup.
Yeah, they talk about atomic swaps. Atomic swap was, I think, kind of the 1.0 before Uniswap came in. But that was cross-chain from the very beginning, whereas Thorchains, it kind of blends the idea of an atomic swap with the idea of liquidity provision and what's going on with Uniswap.
All right. So we are in chat. Brian and I are in a Discord channel, and I just realized I meant to move us to a locked room where no one could come in and like on stream. So let me move us real quick. I don't know if that'll affect anything. Okay, so Brian, you just have to do your restream. There you go.
There we go.
All right, so we're good again. Sorry about that. Okay, so this is kind of and we've burned about 15 minutes. Chat, good to see you guys. If you have any particular questions, just kind of fire away as we're going through this. But I am going to ask some questions that I have, and it'll be kind of an organic discussion. I don't have like prepared notes or anything, but and I think I can kick it off very easily with well, let me first say this. Hi guys, this is Brian. Hi, this is Ledger Status. He's got all kinds of good things going on over at, let me just shill this link really quick, guys.
Oh, look at that.
There you go. And I have I have a bot that's going to keep cycling that every 10 minutes or so you guys will see that pop up. But so Brian and Josh Olszewicz, Carpe Noctem, we've had him around. He's a good dude as well, but they do a podcast together and have a lot of good information. And when Brian streams the LedgerCast live on Twitch, that is the only crypto person that I will actually go and follow. Like I will attempt to be there. I'm at work, you know, I work a 9 to 5 kind of deal. But when he's live, that's what I try to see. So I recommend you guys do that too. Best podcast in the game, says Don Juan, 100%. So anyway, that's my introduction. I did not formally do that yet, so understand. Okay,
Appreciate it.
To kick off the DeFi conversation kind of purely, why would I, as and I'm pretty vocal that I am a Bitcoin maximalist, quote, and not in the fact that I'm like, you guys need to run your own nodes or I'm gonna, you know, kick in your door, but to the fact where the only coin that you're holding long term needs to be Bitcoin, full stop. And that if we're making plays, like I'll analyze literally everything from Ethereum to any shit coin in the world. Hell, Dragon coin we got a 50x on, you know, last cycle. So these we will watch them all, but we will rotate profits and everything back into Bitcoin, and that's the goal. So with kind of coming from that perspective, why would I even speculate on a coin like Wi-Fi versus either alts or Bitcoin itself? Like, especially with the volatility that we're seeing in such a short period of time.
You're talking about that like that's a bug. That's the volatility is the feature, isn't it?
Well, okay, that's fair, but when I see something go from like 4,000 to 45,000 back to 7,000, I'm either thinking that was a pump and dump and it's over, but clearly it's not. It's got some more left in the tank. Like I don't understand it enough to say, oh yeah, well, here's why it did this. Like I know the cycles of a lot of different things just off the top of my head, be it Litecoin or Doge or Bitcoin, like how they behave. And I don't understand this behavior.
Well, it depends on the project. Not all DeFi projects are the same. Okay. Wi-Fi is interesting for a couple of reasons. One, the developer is prolific at launching things and is very smart, but also you could say irresponsible as well. Like he literally puts in his Twitter profile, like I test in production, which is on blockchains, kind of crazy.
Move fast and break things kind of deal.
Move fast and break things, including projects that are worth hundreds of millions of dollars.
Yes.
So there's always some risks according to that. But in addition to that, the Yearn is one of the most fascinating projects. This has nothing to do with the token. That's what the next thing. He said from the very beginning, the Wi-Fi token is basically a governance token for the Yearn project. Yearn.finance is a way to essentially auto invest and do things like yield farming in the ecosystem. And it can be good if it's not oversubscribed. I actually did this. So you go to Yearn.finance and you say, I have, say you have 10.
Should I go there? Is that worth going?
Yeah, it's fine.
Yearn
so they have these, they have vaults, and I could say, I'm going to go deposit on the vaults page. It may ask you to connect the wallet, so you might have to dock the wallet to see further, but it would essentially it doesn't matter. It would show you a list of like Ethereum, USDC, whatever, and each of those vaults is running a strategy. So it collects Ethereum into the vault, and then that Ethereum is being put to use out in the ecosystem, and that Ethereum is going to be yield farming various things in the ecosystem and earning interest, and then coming back to you and saying, here's your annual interest rate that you're achieving by essentially depositing your Ethereum in this vault.
So let me recap.
Yeah.
And for those of you who don't know, guys, and this is where you can pop up and ask questions or whatever, but yield farming is just a way of kind of looking around different ecosystems, and be it DeFi or ICOs or what do you call them, like Dash, master nodes and stuff like that, where you're finding ways to find yield to make money off of these like fluctuating landscapes of different products. And so what I think, and Brian, you correct me if I'm wrong here, because again, this is like my first time to hear all this. Well, what you're saying is, like, this project in particular is basically saying, okay, hey, look, you give me your Ethereum user, and I will then take it and invest it in various ways. You won't know what they are really. All you care about is your return at the end of X amount of months or whatever. And once that time has passed, then you will get your money back plus interest, essentially. So it's like a loan.
It's like you're depositing your it's kind of like they're the bank in a way. But it's just a product to earn based on the underlying in that ecosystem. The problem with it is the yields change over time because they deploy in a certain way, and then the returns can be minimized if too many people go in. Kind of the same way hedge funds, when they get to a certain size, it's harder for them to earn as much because it's harder to get multiples if you're doing investments with more size, because you can't just say like, oh, I'm going to go buy Bed Bath & Beyond with $1 billion firm and we're going to go all in, because you have more than the market cap. You have to buy stocks that don't have the volatility of Bed Bath & Beyond. So something like this, like the strategies that it employs, it essentially dilutes the rewards to the people in the pool. So I think one of the ways that could have been interesting for Yearn to do better was to actually to cap, further cap the Ethereum and whatever else USDC that could go in. But anyway, those vaults are then deployed to do yield farming stuff. And it is worth Ethereum. It's not, you're really not going to get a negative return based on the algorithms, the type of strategies that they're putting them into.
Right.
The other thing is all that's open source. So all Yearn was cloned, I don't know how many times, dozens of times. And each of those essentially goes and deploys the same strategies as well. So you end up creating an ecosystem where there's not really a great differentiator, and it just forces the yields down. So the yield farming got more and more unprofitable. So for somebody like me, when I went to go test it, say you go put in your 10 Ethereum or whatever, and then you come back a month later and you're like, maybe I earned 1% or 2 or 3 or whatever. Then by the time you pay the fees to get in and get out and do all the crap that you did, you may not have earned anything at all. Even though at sometimes, every now and then, you pop up upon a yield farming project when you're earning like 1,000% APY, so like 10x your money every year. But they don't, that's dynamic. It could be 1,000% APY for a week, and then it could go down to 50% APY and, not be worth near as much, or 10% or 5%. And that's what happened with Yearn and a lot of yield farming projects, is people just push their money around and around and around, chasing yield wherever they could find it. And when enough money got in, it got harder and harder and harder. And then it became not worth it for people. However, it did open up. There's a lot of tools. And if you looked on that Yearn website, they had stuff like insure and borrow and
I'm actually okay, so I logged in with my half Ethereum account.
There you go.
Be real good with that.
Yeah. So you can see the current APY on these, but you can also see what you have to provide in order to achieve it. Now, this is a good idea. This is a good one here. Like, so the curve BUSD LP, what that means, right there in the middle, 17% yearly growth is what they say. You are essentially a liquidity provider in the curve ecosystem, and you're exposed to tethers, Binance USD, USDC, and whatever other stablecoin is in there. So you basically have exposure to a stablecoin blend, and then you're depositing that, the curve BUSD, whatever that is, depositing that, and then they are deploying what you deposited into the yield farming strategies, and then you should be able to come back and have 17% more money at the end of the year. Now, compare that to getting something in your bank account. You just earned a ton, right? Yeah. Because 17% sounds incredible compared to the
we pulled up Wells
0.01.
Yeah, that's right. 0.01 is the Wells Fargo savings rate right now. We pulled that up at Streamer.
But we are crypto degenerates. We're not impressed by 17%. And some of these 17? Are because also you're in dollars. You're not even in Bitcoin, so you don't have your Bitcoin exposure. And that's why these right now, if you look at them, like the ones with decent growth are ones that are stable coins. The ones that have ETH or Bitcoin, like they may be a couple percent. And it may just not be worth it to some people.
Okay, so let me pause just to add, or just to ask, like this one in particular, curve.fi, you know, the one you were just going over, when it says a yearly growth of 17, is that on this curve BUSD or is that on the blend?
It's on, well, curve BUSD is it's basically a stable coin that is also deposited into the curve ecosystem. These things interlock so insanely, and that hints at the next risk. Okay, you're earning 17%, but you're at smart contract risk for each of the stablecoin protocols. You're at smart contract risk of Curve's protocol, which this is running through.
Yes.
And you're at smart contract risk of Yearn itself. So
this is almost not enough return to me, because I'm
because you're like, I'm earning 17%, but if say you do this with size, right? Say say someone's like, I'm going to put $1 million in this because 17% on $1 million sounds amazing. But it's like, what are these smart contracts? Like, this is a house of cards, or, you know, it's built on sand, or whatever you want to call it.
Yeah.
And the likelihood of this getting hacked seems really high. Well, guess what? Some of them are getting freaking hacked, like Pickle.finance. I don't know if you've heard of that one. Dumb name, but actually pretty popular project, Pickle.finance. It was one of the like top 10 liquidity projects and high volume as well, because it was being yield farmed. It was being utilized in these strategies. Well, somebody just hacked it for tens of millions of dollars the other day. And that was months after it had been out. So you feel like, okay, maybe this is pretty safe. It's been audited. They all say they've been audited by you know, these firms.
Get out of here.
But I don't know if you're in software, if familiar with it. I am. There's a, you know, even code review doesn't make code perfect. So saying something's been audited, it doesn't mean a whole lot to me personally.
Literally every piece of software we use, even the like the top 5 apps in the App Store, they all have call them like bug bounties, stuff like that. Like there's always something. There's always a way to exploit. Find it now, or. And
when you talk about exploiting something with money, that's going to be your typical Bitcoiner. It's going to be their largest critique of the Ethereum ecosystem in general, because Ethereum, it rhymes a lot with, like, Solidity rhymes a lot with JavaScript. A lot of JavaScript developers kind of move on to Ethereum. Well, if you know anything about web development or app development with JavaScript, like, bugs are just part of the process. But you move that over to something that involves money with Solidity and stuff, it gets pretty dicey. And it's like, we can't really afford these bugs. Whereas Bitcoin, the level of simplicity enables it to be pretty certain that there's not significant bugs in it. And then that's not to say things are foolproof, but like, I bet at the end of the day, say Lightning Network is well adopted and whatever, like the hardness of Lightning is probably going to be significantly better from a security standpoint than the layer 2 solutions on Ethereum, purely because of kind of the developer mindset that goes into what you're dealing with. There's a seriousness to dealing with money on the Bitcoin blockchain that's different than the seriousness of Ethereum. And that's why it's like, when you see people slinging tens of millions of dollars on this stuff, like, they're so degenerate, man. Like,
you better be like, willing to lose it like that.
Yeah, it's but it is fascinating, and the rewards can be absolutely insane, especially when you're early to projects. So let's get all the way back to Wi-Fi. This token is just a governance token for the variety of products. We just talked about the vaults. That was one product in the Yearn ecosystem. But think of Yearn, go ahead and think of it like a bank, like a decentralized bank. They offer a variety of products. You know, you go to somewhere, you get a mortgage, or you get insurance, you get whatever else you get, you know, various things, various services, loans, various things that you get from that bank.
Capital. Yeah, right.
Yearn is kind of like that. This is the governance of the Yearn ecosystem. So the reason for the volatility is because people are like, well, we don't know how to value all this. In some ways, they could make changes so that Yearn token holders actually earn some of the fees of the bank itself. Then it becomes a revenue stream. Then it gives you much more hard line ways to actually analyze what is the value of the token. And some of the DeFi landscape, that could be huge. That could take these projects to be ginormous. there's a little bit of that in the BNB ecosystem already, if you think of it, because they're essentially as unbanked as it gets in crypto, right? Like BNB runs on, like Binance runs on BNB. People get paid in BNB. They're not really, their banking relationships are only for the purposes of fiat onboarding. Like they are as much of a DAO run by a CEO still, like not independently governed as there is. Well, think of these governance tokens as potentially being that as well. And think of the governance tokens also earning the fees on the back end of the various products and services that exist. So people are trying to say like, okay, well, it's worth a lot, you know, like,
right.
And on top of that, I don't know what the final supply of Wi-Fi is, but it's not a lot. So even at $40,000, the actual fully diluted market cap at the end of the day, however many years from now, it was maybe $1 billion project. Like it wasn't that big, and it's still not that big, even though it went to 40 grand. But then like they're still trying to figure all these things out, and it's volatile as could be.
Right.
But what's beautiful about it is you're looking at a 4-hour chart, 1 hour chart.
1 hour.
That's
a
1 hour
the
chart.
entire history of Wi-Fi on a 1 hour chart. That's.
But if you're a pattern trader, you're absolutely moaning about this chart, right? Like you see that huge descending triangle on the way down. You see the ascending triangle over there. You saw that everybody was like, "That's not a Head and Shoulders. This is Head and Shoulders is a meme," and then it just dumps like crazy off the Head and Shoulders. And now we're sitting there at a pennant, which is a little more dicey, but nevertheless, like you have some pennant and it's tradable. So the beautiful thing about Wi-Fi, not that one. I'm talking about the little one on the right.
Oh yeah, I got you. This little meme.
Yep. So it's like, okay, well, if this breaks up, it's like it goes over 25,000, it's going to go to 35,000. Well, guess what? You just made 10 grand per Wi-Fi. So traders, they love that. Like that's great. That sounds awesome. Like imagine the euphoria of Bitcoin going from 20K to 30K in like 2 days. And that's the type of moves that people are getting out of Wi-Fi on a highly technical chart on 1 hour and 4 hour timeframes or whatever. Now, do I want to be a long-term investor? No. Do I want to be a trader? Do I want to be a trader of this? Yes, absolutely. It sounds great. Now, I'm not saying that little 1 hour chart's like perfectly tradable, but that little ascending triangle before it was pretty tradable. The capitulation, I was looking for Wi-Fi at maybe like 6,500 down there at the bottom, and it got to 7,500. And there was some kind of, maybe not on the 1 hour, but the very origin blocks, you know, like 4,400 and whatever. One of the time frames has a level around 6,500, and I was like, man, I want to buy the crap out of Wi-Fi if I can get it.
Yeah, anywhere down in that little,
Yeah, but I missed it, and then guess what? It went 4x, like from the lows. It's like any trader wants a piece of that. Like you go buy something, and then on an hourly chart, you're staring at a 4x a few days later. It's amazing.
Oh yeah. Well, so as somebody, so when I first heard the word DeFi, and coming from all the, you know, I've been around a few years, and I'm kind of callous to a lot of this new stuff, and I'm like, all right, another bullshit thing. I'm gonna move on, whatever. And I think Josh and I even joked about it. Like we were playing Call of Duty one night, and we're laughing about how everyone's going to be poor. You know, it was like kind of in one of these deals, and then we had there was that tweet going around of like, you know, DeFi traders yesterday, and they're all like the guy on the boat shelling out the money, and then the next day they're homeless, and they, you know, we're kind of joking around about that. But all that aside, like my skepticism aside, here is what I have to get. Like this is a credit I have to give, and I try to analyze any chart that I look at. I try to be very open-minded, and what I see is that the market peaked around 40,000, you know, and above. But then
it was dicey. I was trading it back then, looking for the long side of it actually, and it was dicey at times.
But like what I have to give this particular chart is that the market is like, this is too much. 40,000 and above is too much. Under 10,000 is too undervalued. So the market has spent a like not insignificant amount of time telling any trader that, you know, somewhere in the 10 to 20,000, like call it 15 to 25 range is a happy medium. And
yeah, well, that gives you a massive, it gives you a massive tradable range.
Yes. But what I expect, or what I suspect will happen, is we get some kind of big nasty pennant, something. I don't know.
Yeah,
I mean,
then it falls out of it.
Yeah, right. Yeah, exactly. That's funny. Let me catch up on chat really quick.
Yeah, I mean, they're trades, and what you're seeing is, in some ways, Wi-Fi is really illiquid because especially if people are going around like, I want to buy one, they're not buying like partials. There's not a lot of coins out there. So you're like, well, how many are for sale? And you're eating 2% on even like Binance because you want like a whole Wi-Fi at $40,000 or something.
Right.
So like the orders that come through, I think, just tend to be bigger when people are looking for whole coins like that. And there's not millions of coins like there are with Bitcoin at those prices.
Got it.
So,
okay, let me address chat really quick.
Yeah, that's really
quick. Guys, just FYI, typically I am like 99% of the time I will address every single question and comment that comes up. Just today specifically, we're grinding through to try to understand what is DeFi. I don't understand it. This is not something I look at. And if you're just tuning in, we're going over a lot of this stuff with ledger status with Brian, and he is the guru. So if you have DeFi questions, direct them to him. We will look at other stuff, Don Juan and Tent G and Official Baldy. We will check out Bitcoin, Ethereum, a few of these others. But I know I could mute myself while Brian's talking, but say this kind of stuff. But I want you guys to know, because I want to listen to him too. And we're gonna kind of grind through a lot of this, and then we'll get back to some other stuff. Anyway, all right. So, like, what you were explaining makes a lot of sense on Wi-Fi, but here's the but. There's always the comma but, right?
Yeah.
There's so many bullshit things out there to try to wrap my arms around and size up a trade and do it, that even to give like Wi-Fi specifically, like one of many DeFi projects, just to commit the mental work that it will require to, one, check the box of this is real or legit or not, and then two, what would be a good trade, and then three, monitor that trade. Like, doing that for every DeFi coin, that is what puts me off just straight away. And I'm kind of a lazy trader, so maybe that's just my personality. But yeah, how do you navigate that?
That's fair. And I think one of the things I'll note is it is a total mental commitment that's required of you as a participant in this ecosystem. However, it was a very, very worthwhile mental commitment if you approach these things as trades. Like, I mean, I moved everything that I had in DeFi by the time I was, by the time there was a top, and it's obviously a cool down, and then you get in a couple times trying to find if there's a reversal, take small little paper cuts or whatever, trying to find out what's next in that part of the ecosystem. By the time I turned everything back to Bitcoin, like, the multiples were in line with 2017 alt spring type of multiples that were available. So in terms of why should I bother, it's because that's where those multiples occurred. They happened in DeFi, they happened on Uniswap, and by the time they got listed on Binance or Coinbase or whatever, you were just the liquidity if you're the buyer at that point.
Yeah.
And the multiples were made with the disinformation, and then people seeing the wins and then flooding in, and then you get the flood of new projects, and it gets saucier and saucier. But I was late, man. I was late, and I made multiples on admittedly, initial investment was pretty small, but
risky.
It was the greatest multiples I've experienced in crypto in the shortest amount of time. And it was worth it from that perspective. However, it doesn't mean it's a forever thing. And additionally, the mental bandwidth that was required was huge. That's why I made all those videos about it, like on my YouTube channel. I did videos on yield farming and, what the heck is the Uni token, and what is Uniswap, and what is Binance Smart Chain.
Right.
It's like, holy crap. It's not just altcoins and proof of work versus proof of stake. And I go on Bittrex or Binance or whatever the hot exchange is right now, and I trade it. It's like so much more going on. What is a liquidity pool? Like those things we talked about earlier. Like, you have to teach yourself all that stuff, because If you don't, you get in and then you lose money, or you chase dumb stuff or whatever.
Exactly.
So you have to go deep, you have to go hard, but when you do, you can be rewarded in crypto if you're early. The other thing, I was late. I was real late, honestly. I was in the like part of the cycle. There's the slow grind, right? The whole time before that. Think of what were the big outperformers throughout the bear market. I know you've been around for a long time now. Big performers.
This most recent one?
Yeah, in the 2018 and stuff. It was Link, Ren, and a couple other
like
synthetics.
Yeah, like synthetics. One hand you could count them.
Okay, just take those three. Well, guess what? Those were outperforming 2018, 2019. All of them are backbones of DeFi. Backbones. So we couldn't figure out what the heck is an oracle? An oracle?
Yeah, that's how I was going to bring up the oracle. Yeah, that's exactly right.
Like, what use is this? And Ren and dark pools and what? And then and synthetics. That one actually has a pretty clear roadmap if you just think about what it is. But it's like you think about this stuff and you're like, I don't know. When Uniswap launched, it was literally you had to interact with it on Etherscan. It wasn't even an interface. Well, it turned out these things were pivotal to all that was done in the DeFi summer, and they were building and they were grinding and they were going up relative to BTC in a bear market. Those folks made multiples. I mean, the freaking synthetics ICO, it was originally called Haven, and it was an Australian stablecoin. And I was with a friend and bought from him OTC. Like he did the ICOs, okay. And I bought from him OTC, a small amount. But I was like, here's a tiny dart throw, and here's like a handful of darts. You have to do it that way. Yeah, so like depending on the project. And it was like if I lose it all, it's no big deal. I did that with 4 or 5 projects. Well, one of the ones that I put a handful of darts on was Basis, which was a stable coin that ended up consulting with the SEC. The SEC said this is probably a bad idea, and then they unwound the whole thing and refunded the money, except for Ethereum was worth 20% of what it was when you deposited. So you still lost 80% of your money because of the losses in Ethereum, whatever it was. So it's like, okay, well, my handful of darts didn't work out. Well, my like tiny dart was Haven, which was the other one. I was like, I don't understand it because it's an Australian ICO. It's like, or it's not Australian. It's an Australian stablecoin project and whatever. Well, they rebranded and then they went to a whole new market in synthetics. So per Ethereum that you deposited would today, synthetics today be worth like $8 or $9 grand per Ethereum. So that was a pretty successful ICO, and that was a 2018 ICO. Like the bear market was on when that occurred. Yeah. So it was not a great time for ICOs, and it pulled off multiples. And now it is one of the most useful products in the whole space of decentralized trading and everything else that goes on.
I mourn the fact that I'm going to have to put in the mental work to actually get my arms around all this stuff. So you're giving me kind of the 101, like the prep course, and I'm using this as my backbone for where I go and study more.
The reason I say, if I thought this was completely over, I'd say like, man, we don't even have to talk about all this.
Yeah, right.
But what 2021 we'll see, when Bitcoin calms down and there's time for people to cycle into projects again, I think that one of these big caps, maybe 2 of these big caps, it doesn't have to be an Ethereum style move. But, Ethereum was a 11-cent ICO and it mooned to $10, right? But then it dropped in 2016 from $10 or $11 to like $6 or $7.
Yeah.
I think that's what we just had with some of these falls for, say, like a uni token or synthetics or like a couple of these tokens. Because if you look at their total market cap, they're still like $1 billion projects max, right? If you do like a Masari on chain effects, like what their market caps are.
Right.
And I think that we have in 2021 some of the true blue chips of DeFi that have working products and token models that don't freaking suck, or they're adaptable token models or whatever else. I think there are a couple of them that are truly like 10x potential coins in a bull market. And that would put them in their right place, say in the top 10 market cap, because we got freaking Bcash and Ripple and Litecoin. Like, it's the same old crap that's still there.
Yeah.
But what if we truly create some of the foundations for a decentralized finance economy, and some of that stuff actually works? I mean, these are products. Like in 2017, we went through a whole market cycle, and half the crap never even, there wasn't even a chain. ADA, when did they launch mainnet? Like this year? But look what it did in 2017.
Right.
You know what I mean? So it's like, if some of these are actually real, what if Uniswap succeeds and they say, hey, you can trade ERC20s and anything that can be wrapped in the ERC20, and it's a whole new way of trading and market making and liquidity provision. And look, we solved a ton of the problems. You're going to have this kind of chart where it's like, that was the moon for some people at $10 Ethereum.
Yeah.
And then it went to 1400, and you're just looking at it like, oh my God, what just happened?
So chat, if you look at my chart here, I have Wi-Fi on the top on the weekly and Ethereum USD on the bottom. And this is what Brian is suggesting, is that, I mean,
tell me
it's a what if.
It's totally a what if. I'm not
like,
trying to send you moon juice. I don't hold any of these right now.
Moon juice, yeah, passing the Kool-Aid here.
Yeah.
But this is what, the speculation is. And again, it's a big if. What if this is as big as it seems to be? For me, if anybody who follows my channel, they know that I am not a big risk taker. I take I try to have an edge on any trade. And we'll always look for the edge on the trade. But what this is, what we're suggesting here is, if Wi-Fi, not if the charts match up, because 4 of the candles are the same, but if the use is actually real, and you start getting big players involved, because with this, decentralized finance, which I say that kind of with a little bit of vomit in my mouth, because people throw that around like they really know what they're talking about. But said another way, if I could kind of remote banking, like all the things that make up banking, like you were saying, loans and some kind of insurances and some kind of yield products, etc. If I could somehow automate a portion of that, then your major banks will pick this up. And that's actually what I do with my day job, is I work with a lot of publicly traded banks. And I'm starting to get a lot of headlines hit my inbox talking about implementing a crypto custody. And this is starting to get a real thing. And I could see that as a potential way for, say, this type of project to take off and have.
Imagine one of these products working to the degree where it's not like Ripple, do some beta test, we'll give you a $10 million worth of our coin in order to, not that type of bank, not that type of partnership. I'm talking about somebody comes in and they're like, damn, this is interesting. What does it look like if we put our real estate portfolio and we are able to essentially decentralize REIT investing? I don't know, there's something out there. I just made that up.
Yeah.
But a real estate investment trust, and it's treated like you treat a yield farm with instant liquidity and various things, whatever. And you give it a good reason. I don't have to create the use case. I'm not creating the projects. Just say one of these works. The addressable market in traditional finance is way bigger than any of these are currently thinking in terms of how they're valued and all that. And if you can assign some of that value to the tokens themselves, which is a whole nother element of the problem, the opportunities here are freaking massive. And I do think you're looking at 100x on Ethereum there, from $10 to 1,000 plus. I'm not saying Wi-Fi is going to 100x, but most people aren't putting in their brain, they're not thinking well, Wi-Fi could 10x, or who cares if it's whatever. You're not thinking it Wi-Fi is Wi-Fi is going to go to $400,000. You're not thinking that right now. right? People are telling you you're nuts. What I'm telling you is it's possible. I'm not saying it's set up that way right now. A lot needs to be done in this ecosystem for any of this to work decently at all. But there's some possibilities that people are not fully quantifying. If Uniswap, if liquidity pools, if they can create a moat, for example, a moat being there's reasons to use Uniswap and versus like one of the billion clones, you know, Sushi Swap and everything else. You have a moat, and then also the technology is so advantageous relative to traditional exchanges, centralized exchanges, order books, the decentralized nature, the accessibility to anyone in the world, the inability to shut it off, because Uniswap, you don't have to go to uniswap.info or wherever the actual exchange is. I don't even know. It's just code.
Right.
The company behind Uniswap just hosts the website, but there's like 10 ways to access it. So if the government says we're shutting down this DEX, they can't. It doesn't change anything.
The
liquid, everything is just going to be there. So then what happens? Like if you bring access to who knows what types of commodities and securities and wrapped physical products, whether it's gold or oil or stocks or a token, that could be so game changing to the way trading is done in the world, especially like non-high frequency trading, you know, like, but your average Joe, they don't have to, what if they don't have to go to TD Ameritrade to buy something? They upload USDC through, you know, some app on their phone, and then they instantly go and they start doing stuff. Like that is crazy what could happen. Like if any of these is adopted, then we're underestimating the size of the market. And that is the potential with the DeFi space. This is the big case. This is the big moon case. It's the potential. It's not the guarantee.
Let me add to your moon case here. Again, this is, you know, this is all spontaneous. I haven't put any thought into this, but just absorbing what you're giving me and adding to what we already talk about, which is the state of the world, where if we look at the M2 over the last several decades, and it actually goes further back, but for our purposes, good enough. So the M2 is the chat for you guys who don't know. This is the number of dollars in circulation in the US. Okay. And you can see as a result of COVID with the stimulus, this is, you can look down at the bottom, March of 2020, as a result of stimulus or of the COVID stimulus, there are 23% more dollars in circulation than at any point in history ever. This is not just like, oh, on the year, you know, just for this portion of the year, it's 20. No, ever. Okay, so we are staring in the face of a potential. This is just one metric of many. I mean, we can look at the CPI and kind of what's going on there, and we'll watch this. Where is my Dixie, and how the Dixie is likely headed for a massive drop, which is the dollar against a basket of other currencies. So if you see these very macro bearish signals, which we're seeing the setups on multiple different fronts here for the dollar losing how it performs against other currencies, and two, inflation specific to the dollar within the dollar within its own ecosystem. Where your purchasing capital a year from now will not be anywhere close to what it is today. If you kind of factor all that in, and the fact that the dollar has been the global reserve currency for about over a century, this could be where Bitcoin steps in and says, hey guys, I got it. I'll take it from here. Guys, you were a great 1.0, but now it's time for the big boys. We're going to step in. And this is where I see, like real world use case. This is where I see banks pivoting and getting involved with these things like Wi-Fi, for example, like kind of the use cases you're talking about. And what I was pulling up kind of over here, thanks for all the follows, by the way, guys. But what I was pulling up here on this comparison chart is how, let me get rid of this visual noise real quick, how at the point where Wi-Fi specifically was about $40,000 as Bitcoin was 10,000. So at that period of time, it was about a 4x, at its peak of its short time frame mania. If Bitcoin goes to say 100,000 or 200,000, to suggest that Wi-Fi might hit 400,000, which is only twice what that particular price might be, on the heels of some good news or a news-based event or something, that's absolutely within the realm of possibility, because that's how these things go. So yeah, if somebody said, hey, look, I see a future where Wi-Fi hits 400K. I wouldn't bet on it right now, but I wouldn't say that they're wrong. I would say that there is a possibility that the market is shown resilience here, because if this was truly just a shitcoin scam project, it would have just bled out. We would not have retraced near as hard as it did on.
Yeah, it's amazing how it's been adopted as a blue chip, because it's like, I don't know. Like I don't know if it's a blue chip. I don't know if it's Netscape or if it's Firefox or if it's Chrome in the browser.
Right. Yeah. Right.
But what I do know is that at current distribution, it's $720 million. It's number 36 on the market cap list. I don't think this one inflates quite as much as some of the others. When I do the 2050 market cap on Masari, it doesn't show me right away. Okay. So I don't know what percentage of the supply is out, but a 10x on some of these, and just take Yearn, put something else in its place, something else in the DeFi ecosystem. Most are still pretty small, and in that sense, like there's not really stuff in the top 10 yet, except for like Link. And when you let's see the 2050 supply versus the reported supply. So when you compare those things, it's got a lot of potential, I guess, is the that. I mean, you look at the top 10 right now, it's Bitcoin, Ethereum, XRP, Tether, Bitcoin Cash, Chainlink, Litecoin, Cardano, Polkadot, BNB. And then there's still BSV, EOS, Stellar, TRX. It's like Chainlink's the only DeFi project there. Cardano, garbage. Bitcoin Cash, garbage. XRP, garbage. They may go up, but right. Like if the DeFi stuff works, they're going to move. Those things are going to move from like 25 and below to top 10, top 15. Right. And there's going to be, I think, essentially one of the flippenings that can occur is going to be the loss of value in protocols that lost. So like there's ETH killers, right?
Yeah,
but they're not ETH. They're not winning. They're empty cathedrals that aren't being used. As those move down, because who cares about an empty blockchain and who cares about your code if no one's using it? Poor Tezos, like it's like it doesn't matter if it's good code. It doesn't matter if 1,000 people spent years building it. If it's not being used, it doesn't matter. And if Ethereum wins, then the things that are built on Ethereum, the things that become products that people decide are worthwhile, they're going to be pulled up too. So the stuff that is Ethereum based, but in the DeFi landscape, is going to move up. And there'll be all the rotation within the protocols anyway, like maybe Cosmos or maybe Polkadot or maybe Definity, or like the new and shiny ones will replace the ADAs and the Stellars and the EOSs.
But there's some of those, but the dinosaurs will move out of the way.
You look at the snapshots of what were the top 10, what were the top 20 coins in the 2014 cycle, the 2016 cycle, the 2017 cycle, 2020. They change, and we are going to see rotation. There's going to be opportunity. And if you're not paying attention to what the narrative is beyond Bitcoin, we're assuming you're seeking to trade, to make money, to be able to have more Bitcoin, because all of us, the most of us, we are, I recently put profit maximalist in my Twitter handle.
Saw that.
But the long-term path to being a profit maximalist is essentially denominating in BTC, because BTC by far has the strongest macro narrative, right? But in the meantime, there will be periods of time where something can outperform Bitcoin, or something can have a markup period where it's okay for me to denominate temporarily relative to the dollar, relative to USD, or keep my collateral in BTC, but make a trade in something else. So many things that can be done there. Some of these are going to do real well. Just like things did real well in 2017, whether they were great or not. Sometimes the crappiest ones like did really well because they had the craziest marketing, like a TRX, like Justin Sun he just manifested a 100x because of his insanity.
Right.
So
well, what about Ripple hitting over $3?
Yeah, I mean, it's absolutely insane. Like those guys were the richest people in the world for like 12 seconds.
Yeah, that's right. I forgot all about that. You're absolutely right.
So there's a lot of opportunity, and if you don't pay attention to what the narratives are in the ecosystem, then you'll miss out on them. I missed out on them when I said that about my the synthetics ICO. I didn't realize that because I sold it in April 2019 on like its first pump at like 3 or 4x, and I was out. So I made a handful of shekels when I could have had a boat. You know what I mean?
Right. And this is, I pull up the Litecoin chart just as an example of playing particular things that are not Bitcoin, but so that your profits can roll back, you know, whenever you monitor some kind of trend breaking.
Yeah, and we're seeing some old coins rotate right now. So like, you know, they're moving a little bit right now. That's just a rotation pump. That's not necessarily a sign that Litecoin is going to be like important.
Sir, Litecoin is the silver to Bitcoin's gold. Haven't you heard the marketing material? I'll have my secretary send that over. Don't worry.
Litecoin, I'm not saying it won't do well in some capacity, but from a multiples perspective and from a sustained period of keeping up with Bitcoin or outperforming Bitcoin, I think some of the DeFi projects that come out of all of the, I mean, if you just go in and ape into like all the DeFi stuff, you're going to lose. But if you pay attention to the fundamentals and then you take advantage of the price action, there's a sweet spot there to make a lot of money. That's my goal. Like I want to take advantage of stuff. Sometimes there's a market cap discrepancy. Like sometimes you can take advantage and buy a small cap, but you don't want to be this person, right? You know, like Nano pumped off exchange. By the time it got to the exchange, it was game over. And it was just liquidity for people that were selling into you forever and ever and ever.
I speak about this often, but I have a friend. So I'm in like a physical collector's do fun. But you know, for example, a little Satori. I don't know if you've seen these, but they're like little poker chips.
Nice.
And there's 0.001 Bitcoin actually loaded on it. So there's fun stuff like that. But within that group, there was a guy that I met, like an acquaintance of an acquaintance, and he was a ICO for Nano. Like he was one of the guys who got in the ICO, and he was like, he had 10 figures to his name, like in USD. When Nano was like 30 something bucks, when it was all locked on that one exchange and no one could actually like move it, so the price just kept climbing. And then he sold a little bit. I think he got like 100 grand, maybe 200 grand out of it. And then he left the rest in it. And we're talking about like not small money. Like he was drawing up a trust fund document and all kinds of stuff. And what's it trading at now? It's $1.20 now. This is a real shit chart, but
yeah,
it went from 30 bucks to $1.
It's callous, but there's a guy, he was named Crypto Gambler or something like that. And I think I was introduced to him by Crypto Messiah, Messi as I call him. Messi. We live in the same town. And so Gambler had a saying, and he said, "There is only the pump," and it's very callous, but I think it's true in most markets. It's not just crypto. It's like there's cycle trades. Look at freaking Zoom. Look at Tesla. Like,
yeah.
Do you really think over the long period you're gonna hit the Amazon? Like Amazon became Sears. You know, they went from like online book selling to becoming like the Sears catalog at the height of the like early 20th century when they ran America. Like they sold everything in America through the Sears catalog. Amazon became that, and
you
then
can't crystal ball like what a company's going to become 2 decades
from
now.
Right. So for the most part, there's only the pump. Like, will Tesla run all automated vehicular traffic? They basically have to justify their current market cap.
Right.
So,
I mean, it's getting crazy. And
so I don't care what market you are. There's only the pump. Sometimes the pump is massive and sometimes not.
This is, and Ripple was pumping just the other day, and it made me laugh because the last time I saw a TikTok pump was with Doge, and we had monitored this for a while because of this
little, a huge range.
And it was over like a year plus, so like a year and a half before it finally shot out. But that was the big talk, was like, yeah, I mean, we all yeah, we all hope we get this 10x pump, you know, up to here or whatever, but odds are good that this is just some kind of like exit pump, whatever. And here, ever since then. So now I will say, because I do love my Doge, I am curious to see how things react, because the last time Bitcoin attacked its prior all-time high, Doge on the Bitcoin pair had a face melting run. So
I didn't realize that was right when it hit the all-time high. That
yeah, that's one of my favorite things to do on here, is to go to pull up
find out where was
BLX.
Bitcoin when.
Exactly. And I pull up this range. Let me up just.
Man, I've been watching Doge. I literally want to go all in Doge. Like, not necessarily at 20 sats, 21, whatever it is. But
I had bids at 15 and it hit 16.
Yeah.
It hit 16 like multiple days.
You know, my biggest reason for not wanting to do it now, as I mentioned earlier, I mostly got out of the DeFi stuff that I was playing with when Bitcoin hit like 10 or 11 grand. It was coming out of that 9,200 consolidation and broke up above 94, 95. It was a really convincing breakout. And I was like, I'm out. I'm throwing it in Bitcoin.
Oh, yeah. So, not a bad
thing. So I threw my DeFi stuff into Bitcoin at that time. And then now we're at 1920, but the year's not over. And if I move those coins again, I have a tax event on selling Bitcoin from 19K to 10K. Yeah. So say 9K per Bitcoin of a tax event. I do not want to realize that gain this year. I want to postpone that because I already have to realize the gains from DeFi and other crap from earlier in the year.
Right.
So I wanted to buy Doge so bad at 16 sats, but I was like, I don't know, is Doge going to go to 30 plus? Because if it goes to like 20, all I did was pay the tax bill. I didn't actually, you know what I mean? Like,
yeah, exactly. So, and it topped out at like 22, but I'm talking about like today it hit 22 and now it's back to 20. So
yeah. And but my thing is, I'm like, just stay below 20. Just hang calm
out there.
down.
Yeah, exactly.
Please, Doge, stay below like 20, even like 25 sats. Like, just stay below there until the new year.
Right.
But I don't think I'm going to be so lucky, because I think you're right. I think as soon as the all-time high hits, it's going to go bananas.
That's what. So we had there's two things we look at here a lot. The first is how Bitcoin behaves on macro. And doesn't mean it has to do this again, right? Gosh.
Yeah, but history rhymes.
History rhymes, you know, who knows? But one of the things that I really talk about a lot, let's just look, is the what I call my WAP line. You're a musical fan. You are a person of, if you can, what we refer to as our WAP line is 20-week moving average, because the interaction between the prior all-time high and where it found support, literally for the entire bull run after, very interesting.
I'm glad to hear you say it, because man, I'd live by the 20-week, and I talk about it on our podcast all the time. It's, you cannot look at the BLX 20 at the weekly and look at the 20-week and not be in love.
Yes, exactly. And so when sentiment was bearish here, but we were holding.
Oh, dude, I was tense, because I was like, it's like 4 candles in a row, and I'm like, just like,
please hold. Yeah, exactly.
And for people that don't know why, that's also the Bollinger Band midline, and people love their Bollinger Bands, so it's a useful metric.
Right. So that being said, now that we kind of understand that, we being like chat, now that chat is kind of caught up with 20 weekly and how that works, watching how this particular interaction with the prior all-time high, which is this white line, and the 20 weekly, and then how Doge found its bottom before mooning, and not just Doge, this is something else we've been monitoring, but like Litecoin.
Yeah, so the first big alt cycle was as it was breaching the 2016 highs.
Like it, that multi,
the 2013 highs.
Right. Yeah, good call. And actually a funny Litecoin specific story. Something I bought from Charlie Lee had Litecoin loaded on it once upon a time, and now it's just like a paperweight. But I asked him, hey, when you sold this stuff, when did you sell it? Because everyone knows the Charlie Lee memes about selling the top and all that, and give him grief forever about it. But he goes, I sold it after we had a pump to about $5 or $6, and then it came back to $4 or $5. He said, I exited 90% of my Litecoin bags. That I didn't think it'd be worth a penny. And he goes, and then I did have some left that I sold up here, and everyone gives a shit about it.
Yeah, Charlie's a nice guy.
Yeah, he's a good dude.
He took a lot of crap about that. Something that everyone forgot too, and I don't know if he followed through with it, but he said he was actually going to donate the proceeds of that sale to charity. And I don't know if he followed through on it or if maybe he just doesn't talk about it. But
I don't know.
If he truly did donate that to charity, then we're really giving him crap for no good reason.
Yeah, I mean he mined all that too. That was his other big thing. He's like, it's not like I got it as a free mine deal. Like I physically, my systems did work. I got that as a whatever. We kind of go on and on, but just the punchline to this is even Charlie undervalued what he had or didn't have the crystal ball. I mean, the guy literally is one of the early inventors of a lot of this stuff, was there in the mix, and it didn't give him any special view as to what could come. So like back to your topic of DeFi specific, what could happen, that kind of stuff. Yeah, absolutely. Anything could happen.
Yeah, there's no guarantee. We don't know exactly how retail is going to come in and observe these things. Now, you can presume in some ways, like they're going to observe them in some of the dumbest ways you can imagine. So something with a narrative that a new person can attach to might have a lot of weight. DeFi is not the easiest thing to understand. We've been talking about that here. So if something in the DeFi realm is easy to understand, I think it will give it a leg up, right?
Right.
So that gives some weight to me to like maybe the synthetics realm, right? Because it's like, oh yeah, well you can trade oil but on blockchains, or you can trade gold. It's like wrapped security. Like there may be some narratives for some projects over others, because some projects are just too nuanced and complicated to figure out. They may end up being whatever, like the bones of the financial infrastructure, but that doesn't necessarily matter for getting retail folks to buy your bag.
Yeah. And it doesn't mean that even if it's implemented into something great in the rise in value today, and you should give up your Bitcoin for that.
Yeah. Not to mention two other things that will just impact people's point of view. One, it being more expensive than Bitcoin. So like a Wi-Fi scenario, low supply. Right. And then two, being really, really freaking cheap. Right. So it's like, this thing's only 10 cents. I'm going to buy it on Coinbase.
Yeah. Like the 100% pump today.
Yeah. What's it matter? All these other things, all this dumb nerd stuff y'all are talking about. It's cheap. Right. It's going to it can go up 1,000x.
So Peaky, by the dip, the user in the chat, he linked this, and it's Crypto Yoda, who's a popular dude, 7 hours ago. Oh, I had not seen this.
Somebody was just talking to me about this, and it's insane.
So this is wild as hell.
So
I know you can't exactly see this perfectly, but this is showing a $500 valuation for this Grayscale Litecoin Trust.
So there's a premium built into these trusts because it's based on the supply and demand, but the net asset value is based on whatever number of Litecoin they actually have in custody for the Litecoin trust. And ends up being a premium on the LTC N one, and then there's ETH and then GBTC. So there's sometimes that premium is pretty small, but the ETH one had a massive premium for quite a while, and then the premium finally drew down and drew down and drew down. One of my friends bought it when the premium went back to zero. Kind of an interesting indicator. It's like when the sentiment is essentially, so when the premiums go way down, it means essentially the sentiment has bottomed, right? And it may indicate a market bottom. And so one of my friends played the ETH market, and I quoted him on Twitter today or yesterday, and somebody responded with this Litecoin one. I was like, oh my gosh, I didn't even know this was trading, but it's like this massive freaking premium. It was Adam. Sorry, I tweet too much. This is gonna be embarrassing. You're gonna have to scroll through.
I shit post all day. So
There it is. That's
Is it
it.
this
That's
guy?
it. Yeah. So he traded ETH. Adam did. He's a great guy. He's a miner too. Like he's a spec miner.
Okay.
So he took some profit on his Ethereum trade today because the premium's getting back up high. So literally, you can figure out synthetic ways of playing the Grayscale trusts with the premium, and then you could even arb it out through your regular crypto markets where maybe you take a short while you're long here when the premium's low, or whatever.
No, I like that. That's a great stuff. Do you need to build that into some kind of DeFi and make a bunch of money on it?
That's the type of thing. It's like maybe there'll be a world where some DeFi product interacts with much more stuff, and the way all these things talk to each other could really change over time. There's other elements too that people fit into the DeFi narrative, but we could see things actually pop up. And one of the ones I like, I'll just mention, is I don't like digital only NFTs are kind of weird to me. But when I think of an NFT, that's exactly right. Like say some boats I'm okay with this. But there's some concepts when I think of an NFT, a non-fungible token, it can be much more of just something that's unique, right? And so you think of a piece of art, or think of a piece of real estate, something like that. And I wonder if the NFT concept can be something where it's the digital reflection, the proof of ownership, the proof of existence, of something that's real in real life. And I think in art, that's where NFTs maybe have some interest. So I've thought about, for one of my friends who's she's a web designer and also an artist. And I've thought about just talking to her and see what she thinks of it from an interest perspective. Because it's like, what if your art was sold and then it was like the certificate of authenticity was a coin, but also this thing was liquid in its own right. So like someone could re-auction the art and then have a legally binding contract to have to ship it off to them or whatever, it's like it creates a whole different art market. Maybe if you have this kind of physical plus digital NFT concept, or fraction.
Check this guy out because he's done something like that.
Or fractional real estate's another one that I find fascinating. Now, obviously there's tons of stuff in terms of like how you deal with this from a regulatory perspective. Excuse me. But like imagine an NFT for the Mall of America, right? And people are like, they're trading units of the Mall of America, and the Mall of America and every other piece of real estate becomes fractionally investable. Like you just opened a massive market. And is there some reason why maybe a blockchain is a better way to do that than traditional finance enabling something similar? I don't know. Maybe it is.
That's interesting. And a guy in chat just said, hello, I worked on a project using NFTs to simulate prescriptions to work around electronic health records of pharmacies.
Yeah, that's pretty cool. I mean, there's a lot of experimentation going on like that. I think one of the big things we need to see for some of those to work is for the protocols to essentially be more fair, right? It seems like every time somebody has an idea, then they have a token around it. It's like, well, 40% goes to the team and 10% goes to marketing and 30% goes to, it's like, come on, man. Yeah. It's like, can't we just launch something where you invest in it yourself, like Charlie Lee did? It's like you believe in it, so you invest in it on top of building it, right? But you invest in it when you're early, and that's your win. It's not like, well, we invested in it, so we get 10% no matter what.
Forever.
Yeah. It's like, I feel like we have to have these better launches for tokens if you're going to have the token economy for it to actually work, because otherwise you just make it a security. It'd be so much cleaner, right? It's like, you're just a company. It's a corporate security disguised as a token. And some of that stuff.
We've been through this in 2017. Like, you're going to get caught and slapped and the whole deal.
Really don't want to do this again.
Refund your customers, and been there, done that. Speaking of refunding your customers, chat, by the way, I know Bitcoin is down a little bit. Brian here has graciously offered to refund anybody who's lost some money. here today. So thank you, Brian, again for that.
If you're too upset though about Bitcoin being $18,840, then we're gonna need to talk about your positioning.
Talking to you, Baldy. We had a guy in chat earlier. He was like, "Hey, I all in long." Oh no, he actually said he shorted it, and he's a degenerate, so I'm sure he went 100x. Which no. Eth looks like it will get nasty. Okay, so, and I mentioned this when we were kind of setting up. Here's a question for you. So, taking into account that all these, Bitcoin and Ethereum, everything has its cycle, and that there's an ebb and a flow to literally everything. And the question is, okay, what would make for a good macro top? And one of the things that just kind of strikes me as like hey, I wonder. And I'm very bullish on Ethereum USD. So let me just start by saying that. Like, in no way am I saying this is going to go to zero or anything like that. But as far as like Wyckoff accumulation, I don't know if you do any kind of Wyckoff stuff or look at it in that lens or anything. But
I can observe it, but I don't look at things as that's my way of analyzing.
Okay, well, just as like a real quick rundown. And for anybody who's not familiar with this in chat, this is something
I let Josh do that for me.
Yeah, and Josh liked this stuff, and I think he brought it up in one of your podcasts. But what Wyckoff accumulation is, just what it is a big nasty downtrend, and then whales saying, "Look, here's where I'm buying," and over a period of time, call it a year, whatever. You have these a trade range form. You have these highs and lows, lots of tests of it. A terminal shakeout, a spring, whatever you want to call it, before it breaks out, consolidates, and then the uptrend resumes. And then we monitor the uptrend, or at least I do, by the 20 weekly moving average, because that tends to be happens. But if we can find something similar, maybe we'll have an edge, right? Hey, let's see what happens. And Ethereum is actually one of the best looking. In fact, the total to market cap, literally the entire market cap makes this particular pattern where you have a trade range form, you have a high low, you have a big terminal shakeout, thank you COVID, you have a breakout to new highs, you have consolidation, and now you have an uptrend. And I will continue to monitor the 20 weekly on Ethereum, which we haven't done before, because there's just not a lot of history to doing that. But if it works for Bitcoin, the first range, then I will likely work here. And let me blow your mind. If you're already like, oh, that's kind of interesting, whatever, let me blow your mind. Let me show you this comparison. And where do I have it? Here. Ah, yes. Okay. So, ready for your mind to be blown. This is Bitcoin. Here's Ethereum. What we're watching. Very similar structure. Sorry, chat. Hang on.
So basically, you think Ethereum's going to supermoon?
Not only supermoon, but look at the price. $300 was the ceiling that Bitcoin had to overcome before it went to 20K. The trade range was the ceiling of the trade range was $300. Ethereum's trade range was $300. They are literally the same, even the same prices.
If you want to get some people shook, send Ethereum to 20K.
Send it. Send
Josh and I were talking about our last podcast, and we were talking about price targets and like what do we think is super moon for Ethereum. And we heard when people, when we get to a certain number, we're like 3,000 or something. We're like, all right, man, you can have them. Like they're yours. But then what do you do if it goes to 20K? It's like, oh god, mistake of the century, right?
I mean, yeah. So 10K is my like soft target, which is going to be hilarious to see. And it doesn't really work.
So you think Ethereum will go to 10K?
I do, because one, this was 2 years of accumulation. Two, it's literally at the same price point. And three, looking at the Ethereum Bitcoin ratios, it makes sense if Bitcoin hits say 200,000, like it's within that. Like, okay, yeah, okay, I could buy that. So
I'll be shook.
We'll see what happens. We'll see what. Now, the thing with Wyckoff is, with Wyckoff accumulation comes distribution. You have to monitor that. It's not just going to be like right now. You can't just make a call for top. it's the saying goes like, you got the strong man pushing the boulder up the hill, and everyone comes and kind of helps him push, thinking that they're pushing the ball up the hill too, but really they're not. It's like that one strong, biblically Samson strong man, and as soon as he hits top and he's good, he just gets out of the way, and it just crushes everybody, just like what happened the first time around. And everyone who was in there behind it gets crushed. I mean, Ethereum went 1,400 to 80. So from let's say it hits 10K, we're talking about coming back down just as hard. So we'll see what happens. But I think 10K is absolutely positive.
1,400 to $83 or whatever.
Oh my God. Yeah. And that got so many people out, like forever. Like it took 2 years to really get everyone out of it. And can you imagine being in these candles too, where you're like, oh, maybe it's gonna moon, I kind of think, and then COVID hits and you're like, nope, I'm out, I'm done, it's all a scam. And then here we are, went from $100 to $600.
I mean, the degree of
insane.
I mean, it's not just Ethereum, it's not just crypto, dude. Like 80 to 500 is less than some of the stocks that are out there. Like, we have seen 10x's across so many stocks. Like, and granted, they went down 50-60%, but they were inflated. They went down a lot, and then they went absolutely insane, and they blew out the highs. And it made the market so difficult for me to look at in a way that was logical. I have been such a conservative investor in the legacy markets really since like 2018. Like, by the time we had the vol explosion in February 2018, I was like, look, man, I am not impressed, with the legacy market. So I avoided a lot of the drawdown through all of the volatility that occurred over those years because I just wasn't super exposed, so.
Right.
But then you look at it, it's like, we're not that much higher than we were when I was starting to exit the markets. But so it's just like, are we going to moon now? Like, is everything better? Are we going to price in everything in COVID, and is 2021 going to be like Moonville? So if it is, I don't think it's going to be in the same stocks that have already done so well.
Yeah, and there'll probably be some capital rotation, and I agree with that. But one of the so Bitcoin Schmitcoin's a buddy of mine, and one of the things that he pointed out, like he's the one who was like, hey, you should check out the Dixie, and we kind of got discussing this. But one of the things that he told me, and ever since it's just sat in my head, was COVID equals stimulus, stimulus equals inflation. The only way to beat inflation is to sell your dollars for anything else. Sell it for real estate, sell it for gold, sell it for crypto. Trade your dollars. Do not have it in savings, like US dollars are sitting in savings, because any kind of inflation event, whether it's, super hyperinflation, Venezuela style, or even lower, like tamer, that maybe it's 5%, 10%. But if we have any kind of inflation event, if you held your capital in dollars, lose. Like, these gains we're seeing, in my opinion, are people fleeing from the dollar, their dollar reserves, and they're trying to find a place to put it. So real estate, gold, stocks, crypto, they need that return to offset the inflation that they're projecting. That's my take on it. I mean, who knows? No crystal balls.
Yeah, but that's what's so hard, man. It's like, how do you predict inflation? Inflation has been so difficult and nuanced. Like, if you actually look at what they say was inflation, there was very little on target, right? Almost difficult to inflate.
Right.
But if you look at some real life stuff, it's like, yeah, we've definitely had inflation.
Yeah.
And I agree with you. It makes me a little scared, but I agree with you that I think inflation is the next big macro move in markets, which also is going to tell me to get in certain types of stocks, right? Stocks that have assets, stocks that have dividends, stocks that make money.
Yeah.
And therefore, being exposed to the dollar and bonds in a period of inflation is a horrible idea. But it's like, I grew up in this deflationary cycle, and I was graduating college when the recession, when the Great Recession hit in 2008. So it's like,
Yeah.
It's like you just get this pounded in your brain that when the economy is bad, numbers go down, right?
Yeah, and
It,
so and I don't want to make people think I'm some oracle or god or something. When I saw prices going up, when I saw stocks going up, I didn't understand it either, and it took like months of reflection to try to come up with some kind of thesis. And so I mean, I have my own thoughts, but at the time, I didn't know what was going to happen because I'm with you. Every chart says, oh, some kind of recession equals numbers all go down hard. And then we saw like a dump, and it happened, and everyone got with a self-fulfilling prophecies, that kind of stuff. And then everything rallied back like crazy, like Tesla, and Apple, and those were some crazy events.
yeah, it's I mean, it's wild, and it would tell you if we are going to hit inflation, then a lot of the things that people own now are going to get turned upside down in terms of what they should be owning, and it's going to get complicated. Americans especially aren't accustomed to dealing with inflation. But if we're wrong, if we're like really wrong about inflation, then you could get really lopsided, right? Because you're in all the stuff that you don't want to be in if you have a
fair point.
If the market shrinks, right, then dollars are exactly what you want, and you did everything you could to get out of them, and now you don't have liquid markets, so they go way down, right? Because it's everything's contracting, money's leaving the ecosystem. You've been talking about like, you talk about M1, M2, M3, whatever the different levels of money. Debt, the reason the market goes down, like what's a deflationary cycle, is that debt becomes money, right? That's what becomes money in the system. And so when debt is given out, then we're putting new money in the system, and essentially increases the balance sheet's overall money in circulation. So when debt becomes tight, because people either have to pay it back, or they go bankrupt, or people stop lending it because their balance sheets aren't clean and the borrowers aren't good, then money leaves the ecosystem. Everything contracts. Liquidity gets more difficult. The economy shrinks. That's the deflationary cycle. So if you're predicting, hey, we're going to have an inflationary cycle, which has been rare, it's like that's whoever gets it right is going to win big.
Yeah. You're placing your bets, and you're on one side of the trade or the other, or you have some kind of hedge.
If y'all haven't read it, I talk about this as much as I can. Ray Dalio's Big Debt Crises is a fantastic book.
Okay.
Fantastic book. And it's basically just modeling what is a deflationary cycle, what is an inflationary cycle, what does it look like when the economy goes to crap, but with totally different models.
Right.
And it talks about real world ones and then model ones, and it's like it's near textbook, but you can even get it free with a PDF, but you can also buy it on Kindle or Amazon or whatever.
Okay. Yeah, and I get the basis or the basics of a deflationary environment where like you choose not to buy the chair for $100 today because hey, it's going to be $90 next year. So like that kind of massive market effect across like all industries is relatively harmful. So they being the powers that be try to steer the economy to have like a 1% to 2% inflation because hey, it's actually better for you today versus tomorrow. Your buying power is adjusted. But that does sound interesting. I will check.
Yeah, and the opposite of that is you get paid and you immediately want to spend your money, right?
Yes.
Because you're like, I don't want these dollars, I want eggs. Forwards Jack had a question about taxable events, and they talked about switching between Bitcoin and Ethereum and stuff. This is very important going into a bull market because a lot of times we have at least some form of cyclical top around the new year, and I swear that it's tax related because people are having to put money aside to pay their taxes. Just for
Reasonable.
The general point of view, every transaction you make in crypto is taxable. So let's take the example of, let's say you bought Bitcoin at $10,000, and then you took Bitcoin, and when Bitcoin was $15,000, you bought Ethereum right on the BTC ETH pair. It doesn't matter how you did it. what you did was you sold Bitcoin for a $5,000 gain, and then you bought Ethereum, which is a new trade essentially. So you have to break it down as if it was $2 trades. So now if Ethereum was $400 at the time, you bought Ethereum for 400. Now Ethereum is at 600. Well, you send it back to Bitcoin. Well, now you've realized a $200 gain on Ethereum per Ethereum, and you sent it back to Bitcoin at $20,000. Well, now if we go to $30,000 and you cash it out at the end of the year, we end December 31st, $30,000. Well, now you've realized $10,000. Therefore, you made that combination of dollars. Each of those was independent trades. You didn't cash out anything. Okay. Now, January 10th, let's say you started with 1 Bitcoin and now you have 2 Bitcoin. Great. You have 2 Bitcoin. Well, January 10th, we go from $30,000 and we start a downtrend and we don't bottom until we get to $10,000, and you panic and you get out. And now you have 2 Bitcoin that you sold for $20,000. You started with $10,000, your 1 Bitcoin. You've made $10,000. Wrong, because you actually sold into Bitcoin or sold Bitcoin in some fashion at $30,000 at the end of the year. So the government says you have $60,000, but you're like, no, I only have $20,000. Nope, that's the next year. You owe taxes on the fact that you started buying 1 Bitcoin at $10,000. You sold in some capacity or transacted 2 Bitcoins worth $30,000 each. So you made $50,000 according to the government. So you owe taxes on $50,000. Let's say you owe $15,000. Except for now, your 2 Bitcoin, based on your profit, are only worth $20,000 because Bitcoin is only worth $10,000. Well, now you owe $15,000, but you only have $20,000 to your name in crypto. Congratulations. Now you have $5,000 and you've lost 50% on your crypto experiment.
And this is real shit, guys. Like, this is, and Arctic One swings in and goes, nah, just wing it. I mean,
if you think I'm wrong, I can tell you, I know millionaires from 2017 who went through that scenario. They finished 2017 and had enough taxable events, and they didn't take it out and they didn't protect themselves. They lost their portfolio in 2018 and they freaked out because they owed more than their portfolio value in taxes from 2017.
Yeah, no, he's absolutely. Now, here's the little footnote. Tax law could change. And if crypto, like for example, there's something called a 1031 exchange. If you buy real estate and then you sell your real estate and put the proceeds and the original funds and everything straight back into a new piece of real estate, then that is actually not a taxable event. And with some contingencies, but for the most part, you don't actually pay taxes on that. So it is encouraged to go from real estate to real estate. And so a lot of people will play that game. Some people speculate that maybe we do that eventually within crypto. But for now, what Brian is saying is 100% dead on. And if you think you're going to get away with it, just know that Coinbase loves to tell Uncle Sam, say you use Coinbase, they will tell the government everything there is.
Now, the easiest way to just get around all of this in a safe way, you're going to have to account for it whenever you report your taxes. At the end of the year, you need to know how many dollars is that. And just go ahead and take 30% of your gains or whatever you made and put it somewhere else. Just put it somewhere else.
Yeah.
So if you made 10 grand, take $33,000 and just put it somewhere else. You do not want to risk it because markets do cycle, and they love to cycle on these calendar years. And this is why. Mm-hmm. And then they cycle again in April or September, whenever those taxes are due, because people are having to sell just to pay them.
That's interesting. I had not connected the dots on the April. I know that that's kind of a downtrend area, but I hadn't put it together that it might have something to do with taxes. I had for the end of the year. I get that, but that's really interesting. I just hadn't done that.
Yeah, and they'll do you the favor of reporting it for you. If you reach certain volume or whatever, these American exchanges, that they're going to do you that favor. And the other thing you need to do is you need to know your cost basis if it's not cut and dry. You're crossing exchanges, you're going between wallets. You could have something that in your accounting program is nope, this has a $0 cost basis. You just made X
Yeah,
number
like
of
your
dollars.
airdropped Bcash or something.
Yeah.
Like at the
Or even if it's not, it might not reconcile very well. And then it's like, it thinks you have a zero cost basis, but you're like, wait, no, I don't. I definitely paid for that. I did not make 100% on it.
right.
Yeah. So you need to be paying attention to your taxes. This is real stuff.
So I have used for the last few years, I think it's called Bitcoin.tax, and they're
It's
pretty good because you can plug in an API and then they'll even flag stuff and be like, whoa, we show that you sold, like 1 Ethereum at $1,000, but you bought it at 0. Is this right? I mean, maybe it's right, but hey, did something off there? And you can kind of manually tweak that kind of stuff. But that has saved a lot of legwork because here's what
DeFi just adds complication to all.
Right.
Of this.
Another reason I haven't touched it. But here's what put the fear of Jesus in me. In 2017, I used Coinbase. And then like whenever they send it out, let's say first part of 2018, I got a thing in the mail that said like a 1099, I guess, from Coinbase. And they said, hey, just so you know, we just told the government that you made $6.5 million. And then it said in trades. But I didn't catch that. I thought that they had passed on to the IRS that I had made like 6 million, and I had made that. I was like, what the hell? I'm not even close to that. And I called my dad and I was like, well, if I get arrested and you get a call from me and I'm in jail, here's what's up, because I don't understand. And so I had to sit down with the CPA and work through all that. And
yeah, even when you do a 1099K or something from a legacy, like say you have a Charles Schwab account or whatever, if you bought and sold throughout the year, it'll say like you bought $500,000 worth and you sold $520,000. Well, you made $20,000, but your volume was much different than that. So the 1099Ks report volume, and that's what's going to give you the barriers on like Coinbase and Gemini and stuff too. Is that if they detect certain volumes, they will trigger their own reporting that they give to the government, and they will give you a 1099K for that component. And therefore, you have to include that in the way you're accounting for your taxes. But you could do that volume. Say you do $1 million worth of volume on Coinbase. Even if you're small, you could buy and sell every week or something, and it could add up.
That was my deal. I think I had on Coinbase at the time, I had like 30,000 or something. But I was such a degenerate. I came from a completely different area, and I was just like slamming the full market buy and market sell key like multiple times a day, and it ended up being like multiple millions. It's ridiculous.
Yeah. But you need to acknowledge that, and then all your stuff on other exchanges. Because imagine you made money on Coinbase, so your 1099K from Coinbase says you made 20 grand. Well, your trades, because you lost a Bitcoin on BitMEX or something, you're like, well, I didn't. I lost, I only made 10 grand or something. It's like you need to respond in kind to say like, here's my documentation showing my actual profits and losses and accounting. And if you don't do this stuff, you're going to get taxed more than you expect, or you're not going to be able to account for your losses properly. You need to track everything you trade, everywhere you trade, and you need to account for it at the end of the year, and just do it right. Because if you don't, if you get audited or whatever, and you can't justify it, you could end up with a big old bill on top of that, and it's going to be nasty.
And do your best. I mean, you don't have to like really, really stress over this, but as long as you're doing your due diligence with like
putting money aside,
put money aside. But also, if you use some of these programs like Bitcoin.tax, or I'm sure there's 10 others just like it.
Yeah, they're really helpful.
Where you're pulling in APIs from like for me, I'll use 6 or 7 exchanges over the course of a year for different things that I'm doing. And if I can API all that information in, and it makes sense, and it's like 400 pages you can print out, then I feel like I can justify anything to any examiner or whatever. And if it says I got to pay, $10,000 in taxes, that's what it is. And you just suck it up. And that's the cost of dabbling in crypto. You made a 10x somewhere.
One other component, and this is the only thing that talking to my accountant was, in most legacy exchanges, per trade, you can say, I want to count this as LIFO or FIFO, last in, first out versus first in, first out. So that's based on basically saying, okay, let's say you bought 1 Bitcoin in January, and then you bought another Bitcoin in March. If the LIFO versus FIFO is basically going to say, when you sell one, which one are you selling? Because if you sold the one that was more cheaper, then you're realizing more of a gain now. So you can make determinations because the exchanges do not give you the option. Now, when you're doing this on Charles Schwab or something, then they essentially are making you choose LIFO or FIFO or some default up front. In this scenario, you're making that determination yourself because the exchanges do not give you that option. So in Bitcoin.tax or coin tracking or token tax, there's a bunch of them. I've tried a bunch. You can actually identify this trade as LIFO or FIFO. All trades are LIFO or FIFO. And then what I've done is I've just made that determination and been consistent each year. So 2017, 2018, 2019 have made it to where I'm just I'm steady each time. So I chose one and then I went with it for whatever was tax advantageous.
Yeah.
The first time around.
In the software I've used, it'll actually break it apart to say like Ethereum, here is your breakdown. If you choose to use FIFO, here's the output. If you choose to do LIFO, here's the output. And there's like I think 2 or 3 other options. And then it'll go through by currency. And I think current tax law says you can actually choose per cryptocurrency. You can choose how you want to do it, LIFO, FIFO, whatever. And so you can actually have like kind of a mix of the cheapest way to legally pay taxes.
Yeah, and one of the ways this can be impactful, Mercedes just mentioned it can impact what becomes long-term or short-term. I see a lot of people say this, and they're like, here's my cold storage stack, and here's my trading stack, right? Well, okay. It's like, here's 1 Bitcoin that I send over there and 1 Bitcoin here that I trade in and out of. Except for if you're not careful, like you're not just paying the taxes on the one that you trade with. You're paying the taxes as if you sold the one that's in cold storage, depending on how that's structured. So it can get funky. One other element to that, the way I'm exposing myself to the market, but not realizing the profits on the Bitcoin that I put aside after DeFi summer stuff. This is why I'm keeping my collateral in Bitcoin and margin trading if I take a trade where that Bitcoin exists. And then alternatively, I have some Bitcoin that I left in DeFi and it's in wrapped WBTC. So wrapped Bitcoin, it's in WBTC. If I converted that back to BTC, that would be a taxable event. So literally just turning it into regular BTC would tax me on it. So instead, I just left it in WBTC. And now if I want to trade an alt, I can actually lend the WBTC through Compound or Cream or one of those services, borrow USDC against it, and then trade an altcoin and then pay it back after I'm done with that swing trade. And that way I'm not realizing the taxable event there. I'm just realizing the individual trade for whatever I borrowed the USDC for.
This stuff have fun explaining all that stuff to your CPA as well. And then airdrops and forks and all that. Because I talked to mine who's like this old school dude, and we were going through it and he's just stared at me.
Yeah.
And he was like, he got his phone and he had this kind of younger girl that worked with him. And he's like, get in here, I need you. And so we had 2 of them behind I was like, all right, let's take it from the top. Here's what kind of happened. And we were going through it all. Finally got it. We figured out what we're.
It stinks. All right, man. I'm gonna have to go here. But
yeah, no worries. All right, Brian, I appreciate you being here. Chat, if you guys want to check him out, let me spam his website again. This is it.
Ledgerstats.com has the podcast episodes. The easiest way to get that, we have Twitch. You're on Twitch right now, so at Ledgerstats on Twitch, we'll give you notifications of when we actually stream if you want to participate. But then we take the production show. So we have some pre-show and post-show where we talk about stuff a little looser sometimes. That's on Twitch only, but YouTube gets everything else. The podcast feed gets everything, all that. So we'd love for y'all to listen.
Yeah, check him out.
Jack's been in there and been a great listener.
I nerd out over that stuff. Yeah, absolutely. And Josh is a good friend too. So I like to support Brian and Josh. Brian, this is our first time to do something together. Josh and I have like killed bad guys in video stuff before. But yeah, I appreciate you being here. I'm going to try to set up my Twitch to where I basically auto host anytime Brian goes live on when they're doing their Ledger, their podcast. And so that way you can watch it, or at least you'll get the notification from follow them, or try to get that all set. So
Appreciate that.
Appreciate you being here. Try to do something again in the future, but appreciate all the info on DeFi stuff.
Sounds great. Thanks so much for having me. See y'all later.
Let